Hey guys, Crypto Whiskey here. Thought I'd do a little educational series, and we're going to start out with something real simple. I think everybody who's wanting to get into trading of any asset needs to start from the basics. And if you don't already know how to read candlesticks and charts, well, I'm going to make a real quick little tutorial of how to do that, and we're going to progress as the series goes on. So, I'm here working for you. Any questions, please leave in the comments, and I will try to get back with you as soon as possible and answer those. Whiskey, if you like whiskey, we'll probably do some reviews on my channel also. So, let's start with candlesticks. What we see right here is candlesticks. If you're looking at a chart on TradingView or any other platform or app you want to use, what you've got here is price action. Each candlestick tells a story. And right here on this chart is the 1 day. This is the daily chart, and it happens to be Bitcoin. But each particular candle has information, and we use that information to judge where the next candle or the next part of the trend will be. And on a daily candle, you can judge the day's price action to hopefully get a better understanding what the next day's price action will be. As you start to understand those, and then you start progressing along, looking further along and seeing clusters and groups, you start to get an idea that this is an uptrend, and more than likely at some point in the next day's candle you'll have higher highs, higher lows. So that's kind of the just the rundown, but I'm going to break it down. Let me pull candlesticks up for you. Right here, what we have. So what we'd call a green candle is a bullish candle. It's usually resulting in positive price action at the close. So when you see a candle, this big full fat part right here, this is the body. And when the candle is green, that tells you that the opening price of that hour or day or week or month, whatever the time frame is, that this price right here was the opening price at the top of that hour. If it's 7 o'clock, then at 7 o'clock, this candle opened at X amount of dollars. And then you go up here, and it ended positively. So the price did go up. You don't even need to know the price to know that. The price did go up. And then the candle closed the end of that hour. It closed higher than it opened. So there's your body. The top and bottom skinny wicks, as we call them, lots of people call them, they call them shadows. They can be either one. These are the action in which happened above and below the price action during that window of an hour, a day, a week. So this candle, let's read it, opened here at say 7 o'clock in the afternoon. And throughout its price action, it made a bearish move down, means sellers came in and pushed it down to here at some point. And then buyers came in and bought it right back up to here. These were buyers, these were sellers. So you had positive price action that got as high as X dollars here. And at the end of that hour, a few more people had sold and it closed right here. So now you know that this bullish candle is green for that reason, that positive price action within that hour from open to close. Just like where, say, a gas station opens that morning, lots of customers made a lot of money, bam, and they close right here. And all you're doing is reversing that to the other side of here of our red bearish candle. That means that hour or that day, it opened right here. And then sellers came in at some point, pushed it as low as this number, and then it ended that hour, day, week, whatever your time frame is, it ended here. So there's the space between your open and close. And then these are the small short moments in which it wicked up or wicked down, like we say. And this gives you an indication of what buyers and sellers are thinking within that hour. So when you see this candle, this insinuates for that 1 hour, the buyers and sellers agreed that the buyers were in control, and they painted a bullish candle. This candle right here is an agreement that the sellers were in control and painted a bearish candle. So that is the basics of it. That's where you get started there. We have some other examples. So where you may have these short-bodied candles, they all don't have to look the same, but typically means if you have long wicks up and down and a little small candle body here, the body part of it, whether it be red or green, it means that there was very little fluctuation in the price action ultimately from the open to the close. Now you may have had a few moments or seconds to the downside, but it means ultimately the buyers settled up at the end of that hour, week, or day just barely above where they open. So you still have the open, the close, and the price action that happened during that hour. Big bodies means there was a big difference in sentiment between buyers and sellers. So where you open, where you closed. It's pretty simple. It's not as hard as it seems, and everyone makes it complicated, but it's really not. It is a pretty simple, straightforward system. Zoom in for you. So this is another kind of candle that we have. Some people want to call it like a bullish hammer, a long-legged doji. There's all kinds of names, but you can get into that later as you understand the candles. Then you can start looking into different types of candles, which I will cover in the next video, of what they mean and what they insinuate and the percentages of that being likely on the next one. Things like that we'll go over. But right here, when you see, let's say it's been in a downtrend, and I'm going to show examples of these. You've been in a downtrend for a couple of weeks, and then at the bottom you have this long wick right here. That means more than likely is the sellers tried to push it down below a key level or price, and the buyers happened to have orders placed at that level, and they felt like that was an area of value, and the buy pressure came in and pushed it back up higher than where it opened. So we have our open and we have our close, and it has multiple names depending on different sizes. So now that you understand that, we'll look at the bearish side of it. If the trend has been up for days, weeks, hours, and you get this right here, it can be called lots of names too, and we'll talk about that at another time. But same thing, you had buyers come in thinking that it's possibly going higher, but when they got to whatever level, price level this may be, there was a consensus that there was sellers and orders waiting to be filled, and they pushed the price back down lower than where it opened. So open, close, price action. Really simple. Now that you have understanding of that, you can look at a trend. This is the 1 day. So we can say each one of these candles here are a day on the chart. And you can see here where you had one of our typical candles of price action. Zoom in for you. And it was very little price action outside of its open and its close. Open, closed. And so they come in all different shapes and sizes, and they all have different names. But what we see here from this area to this area is what we'll call an uptrend. So you have a bullish uptrend going here where you make consecutive higher highs and consecutive higher lows. So once you've established that, okay, we're in an uptrend, you can start using these candles to find reversal points. And it's all about percentages. They don't have to play out. So you're looking through your candles, and as you're going through your charts, you're making assessments of these groups of candles. What are they telling me? They're telling you that one after another, you're starting to see more and more saying that it's possibilities of more upside potential. And you can see here, sell orders happen to be placed at this area, and they tried to push the price down, but there was also buy orders here that pushed it right back up into the following day another green candle, a bullish engulfing candle at that. So that's the uptrend. Now we go over to the other side here, and what we see is a downtrend. And I'm going to highlight this for you real quick, make it a little easier to see. There's our yellow line right there. We have a proven downtrend. And you see the same thing where a downtrend is where you have a high, lower highs, consistently lower highs, and consistently lower lows. Okay, so now we've established after a certain number of touches, which we'll get into in the next videos, so I don't want to get too far ahead of you, that we're in a downtrend. So now that you can identify an uptrend, a downtrend, and you know what each one of these candle bodies and these candles represent, you can start forming an opinion about where the trend is going, where you want it to go next, where you think it's going to go next. And then you have, like right here, one of our examples earlier, this long wick down. Once again, buyers came in, saved the day, and kept it out of that price range. And that can happen to at any point in the trend, day or night. So you can look at different time frames, weeklies, and you'll see a little bit better on the Bitcoin weekly chart. You'll see we had reversal points that it signaled reversals. You had a lot of sell pressure and it reversed, but it doesn't have to signal how long. And we have a small rally and then it dumps again. Or you have the same thing here. Uptrend, big price action, and then the sellers come in and push the price down. That's an indication that there's a possibility of more downside coming. And what did we get the following week? We got a huge downside possibility. And then it's ever changing, day to day, hour to hour, minute to minute. Longer time frames are more accurate because people are more erratic on shorter time frames. So now that we've established that, on the longer weekly time frames, you can look uptrend, downtrend, uptrend, downtrend. And you can start forming an opinion on where you think it's going to go based on lots of other factors. But now you know how to read each candle for each hour, each minute, each day. And it's definitely going to help you in establishing a trend and understanding where price action is going. So hopefully you guys will subscribe to my channel, Crypto Whiskey here. And I hope you all get a chance to watch some of my first uploaded videos. Follow me on TikTok, Twitter, Instagram, Facebook. And I'll be coming out with some more educational soon. But that's Candlesticks for the day. And we'll be putting out some more stuff to help you get more advanced from day to day. I want to thank you for watching.